If you're in the process of purchasing a home and you're looking at the insurance and figuring out what coverages do I need to carry, this video is going to go into depth on the coverages, the cost per square foot, calculating the mortgage versus the just standard insurance, and all of the main things that you need to know on your property dwelling coverage. So let's dive in and explain the main difference. When you're looking at a home policy, it gets a little confusing because there's different terms. You've got your HO3, your HO5, and what's called a dwelling policy. You also have something called tenants, which is more of like the renter type policy. For the dwelling, that usually doesn't fit, even though the terms are used over here in your primary home. The dwelling insurance, or fire insurance as they call it, dwelling and fire, is typically something that's for if you're going to rent the home out. So you're going to build an Airbnb, or you have family that's going to rent the home and it's not your primary dwelling. In the case over here where your standard home policy is, you're going to have what's called an A coverage. That coverage A is going to be the actual dwelling coverage. That's why, see how it gets a little confusing. Ignore the words there for the dwelling word. The main coverage A is called dwelling. That's your home. And you have two versions of the home. You have the primary dwelling where you live in the home, and then you have a secondary dwelling where if you have a cottage or a secondary home, not necessarily rented to others, but used for your own personal use. And then there's some in-between pieces. We'll talk more about those here in a later video. The biggest thing that you have to think about when you're working with your insurance agent, as well as the mortgage broker that you're working with, is are they connecting and explaining this correctly? And the biggest mistake that I see is when a mortgage broker is trying to get the loan covered, that's their primary focus. They're not necessarily trying to get you covered for the home, although they may think of that as your interest, and hopefully they explain it, but they're just trying to make sure that the loan's covered, so the loan's happy, so you're good. The insurance agent is trying to make sure the home is covered if the whole thing burned down tomorrow. Sometimes they don't correlate, where they want a certain amount and the insurance wants a different amount, and so they kind of conflict there. If you're not working directly with your mortgage broker who is also working with your insurance agent, you'll find it's a little bit more difficult because now instead of them talking to each other, they're going to you and you're going in between everybody. And it gets a little bit cumbersome if you're in the home purchasing process. Have no fear, we're going to explain exactly what the agent is looking at when you're looking at your home policy. When you're looking at the actual dwelling of the house, you're going to think of, okay, what's the replacement cost or the expected claim that I could have if something were to happen? We just assume the worst case scenario where the house completely burnt down. If that was the case, how much are you going to be insured for to cover that dwelling or that coverage A? Also, how do I calculate it? I'm kind of curious and I like to know what my house should be covered for, because it does change. That's actually one of the points we want to talk about, is the actual building of that coverage. It's not difficult to understand that portion, and there is a technical way to do it. You could hire a contractor and say, estimate a bid on this and give me your cost per square foot, and if I had to build this exact same house, what would it cost? And you'll pay hundreds of dollars for that estimate. The easiest route, and the way that most insurance companies do, is they do what's called a replacement cost estimator. That's an RCE if you're looking at paperwork. What that does is that takes into consideration all of the materials that the house is built upon. Whether the siding is vinyl siding versus an aluminum siding, whether the roof is your standard shingled roof, or if it's got the higher grade where it's hail resistant or a metal roof, whether the house inside has jacuzzi tubs, crown molding, French doors, all of the pieces that build your house together is where your insurance agent is going to look at those and explain, okay, here's what the estimated replacement cost of that house is. The downfall is that nowadays people are fairly rushed to get their insurance policies, and they want insurance to be as simple as possible. That leaves a lot of the work on the agent and not so much the person purchasing the home. It happens more often than not where the person purchasing the home doesn't know all of that stuff. They just like the way it looked. They like the room size. They like the feel and the vibe and all of those things, but they're not thinking of what kind of nails were used or what kind of drywall was used, if it's 70% carpet or 20% wood flooring, things like that. That's where having like a Zillow listing or an online listing can be beneficial. It's not the end all be all, because those are created by the sellers to promote the house for you to look at. So some of those numbers might be tweaked a little bit as far as the accuracy. That's where the agent is going to kind of pull that information and make up what's called a 10,000 foot view and just kind of see what it looks like. Now, once we purchase the policy, we need to get a little bit more detailed. And the best way to do that is if you have an inspection report. Sending that to your insurance agent is going to make it so much simpler to get that estimate created. Okay, but what was the easy route that you mentioned to calculate? So the best way to do it is the cost per square foot. Here in Michigan, the cost per square foot is right around $190 to $200 per square foot. It varies because the cost of lumber has obviously gone up or down depending on the market that is happening or the inflation that's going on. And so that price may vary depending when you go to insure the house. There's actually a coverage built into that, which we go into our Insurance 101. I'll link that at the end, what is called Inflation Guard. And that kind of protects that piece, is the value and the cost and all of those things. So simple as that. $200 per square foot is average. If you have a 2,000 square foot house, you've got a $400,000 rebuild cost on the home. Now that's kind of a rough guess, right? We're not hiring someone to go in and dive in and figure it all out. But you've also got to take into consideration if it's all brick. You're going to add about 20% on top of that for the size of the house being brick. And clearly, if you have crown molding and all of the extra features and you have a gold toilet, whatever the case is, those are going to add to the value or the replacement cost of the home. So it's not unheard to see something go from $200 to $250 per square foot. It just depends on the quality and type of material you have. One of the scenarios I see commonly where people have a mistake is that they don't cover enough on that dwelling coverage. In this scenario, if you don't have enough coverage, what's going to happen? Well, you're going to max it out. Let's say there is a total loss and the house was covered for $200,000 when it should have been covered for $280,000. That $80,000, it's going to have to come out of your pocket. If it can't, then you're just going to have to rebuild a house to a spec that's less than what you have. One of the worst things you can have is having a claim to where you're not actually getting put back together the way you should be. That's where having the right agent makes a huge difference in the policy. If you aren't working with an agent, or if you want to work with an agent locally here in Michigan, I'll put a link in the description below. We also have several mortgage brokers that we work with that are really good, that we tie with. They can get you quick, fast rates, but also they work with the agent so that you are connecting with someone that knows the ins and outs of the way that the process works. The great thing is there's actually a coverage that you can just add on your policy and not think twice about it. If you think that you're close to or near the replacement value, or you think the house might be more to replace, then you can add what's called extended replacement cost. So on that dwelling A coverage, let's say the house was $300,000, but let's pretend that we think it might be worth more, or it might go up in value in the next 5 years. We can add that extended replacement cost, which is commonly 25%. So now if we have a claim, we have an additional 25% just tacked on to the end if it's a total loss. Some companies will give up to 50%, and the higher end companies that we work with, they'll actually give you full 100% replacement cost. It all depends on the package and the style of insurance that you go with, so talk to your agent more about that if you want to learn more about the replacement cost options. A lot of common questions that we get with the dwelling coverage A is that, why is it so high? Why is my dwelling coverage so much more than I'm paying for my house? And if you're in Michigan, what has commonly happened is that we have older homes. Even if it's a new home, you may find that inflation has already hit after the house was built. So let's take example, a 1950 home in Michigan. That home might be a $200,000 house on the market. But if it's a 2,200 square foot and it has the wood sidings and carvings and all of the things that go into that house, you're commonly going to be right around $350,000, almost $450,000 to rebuild that entire house. The loan to value was way different than the replacement cost of the home. And be a little bit careful, because when you're buying the cheaper homes, if you're not working with the right company, they may actually be denying you for the insurance because of the actual value of the home. This was a fail-safe from insurance companies way back in 2008 and 2010. What people were doing is they were buying these foreclosed homes that were just ripped to shreds. They were starting to rebuild them, but then they had a fire. And what happened was they had a $20,000 house that's now covered for $400,000. Insurance companies quickly started to realize that that's not a good deal for anyone. If the value of your home is drastically less than the replacement cost of your home, you might find that the insurance companies won't necessarily want to insure the home. Your next bet is to find out about the other coverages besides dwelling A, the coverage. There's essentially 5 major pieces of a home policy, and we're going to link that in our Insurance 101. Go ahead and check it out. It's going to go over a little bit more in depth on what we just covered today. I'm Mark with Valor Insurance. I'll see you soon.